Hello, everybody. Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this is the series where we talk with and sometimes about community-based institutions, their digital and business transformation projects, and we meet the innovators, entrepreneurs, and fintechs that make it all possible. On this episode, we're speaking with Andy Bandyopadhyay, the CEO and founder of Attune, about how they are helping credit unions rise to the financial wellness needs of their members. So if you're ready, let's suit up and get out on the field. Andy, thank you for coming on the podcast. We're very excited to meet you. Why don't you tell us a little bit about your background and about your work at Attune?
Attune Insights helps make measuring your mission easy. At Attune, we know that financial health is not just a nice to have or something that lives in the foundation. It's actually a core part of your business strategy and a measurable KPI. So when we say as community institutions, how do we drive growth? We know in the abstract that we drive growth by advertising, being people helping people and being more member friendly, consumer friendly, but we rarely measure our consumer impact or member impact as rigorously as we do our financial impact. So Attune exists to bring those two together and actually show that, yes, when you make members' financial lives better, your credit union also grows. So we bring the analytics rigor that you would expect of your financial function to the impact aspect and then tie that with the business itself.
So tell me a little bit about your background, though. What encouraged you to create Attune and to take on this really important line of work?
I grew up with what I like to call highly educated, very low income parents. And we moved around all the time because my dad kept changing PhD programs. So I was not an Army brat, but a grad student brat. And I always had a love of school research and data, but also grew up in a fairly financially precarious state. You know, there were times when we didn't know if we were going to be able to make our rent or if we were going to be able to pay our utilities in time. And I was fortunate enough to have a full ride to Rice and then to Georgia Tech for a PhD. And on the other side of my PhD, I found myself working in Silicon Valley at all the big places you recognize, at Salesforce, at Facebook. I worked at Instagram within Facebook. And it was very disorienting to me to be in the middle of such wealth and incredible innovation in technology with how I grew up. I know that that's a really common story, way more common than I thought before I became a founder, that so many of us come from harder backgrounds. But having that cognitive dissonance led me to, wait, I need to be working in finance. I need to be working in a way that bridges the gap from how I grew up to where I am now and builds empathy. So I became one of the first ever hires at Varo, which became the first fintech to get a national bank charter, because Varo had a mission of, wait, we know that we can do banking in a more consumer friendly way if we eliminate all of the overhead of branches, if we truly go for a de novo charter. And I like to, at the time, call it being a poor people whisperer for rich people. That actually, what is it like to build empathy in both directions? Because even if you grow up, you forget as things change. And if we want to make solutions for consumers, we have to remember what it's like to be that consumer. And the further we are from the experience of the members we serve, the more difficult it is to make a good product that actually makes a difference, because we'll forget little things about, wait, you offer financial counseling, but you only offer it from 9 to 5. And the people who most need it are not available 9 to 5. So for me, it was, wait, how do I reconcile how I grew up with where I landed in tech? And then how do I use the tools of technology to make what really good, solid financial practice is accessible at scale, instead of requiring $250,000 in assets to go meet with a financial advisor who's going to manage your investments and then also give you a plan. The people who most need the plan do not have that.
Is there a moment when you were at Instagram and you said, "This isn't me"? Like,
oh yeah.
Do you recall that moment? What was that moment like?
Well, first, I should have quit 3 months in, but I was too scared because I was pretty shortly out of my PhD, and I thought if I quit a job 3 months in, then I will never get a job again, which of course is not true. But as a, newly minted doctorate, I didn't know that. But yeah, my signature project at Instagram was, how many ads can we put in your feed before people get pissed off and quit? And I understood why it was very important. I mean, working in finance, we can never ignore the business side of things. We have to be able to pay our bills. And if we don't create ads, then people don't know that we exist, and then we're not going to survive. And actually, I did a whole bunch of user research with little dry cleaners who were trying to advertise on Instagram and understand how to let people know that, hey, we're in the neighborhood and we can help you. So there were really cool elements of it. But when I thought, I grew up with a dad with 2 master's degrees, with a mom who completed half of medical school and then dropped out with all of the debt and none of the income. And then my parents got divorced and we were on Social Security disability, really on the edge. And I had the great fortune of top tier degrees, bachelor's and PhD. And I'm spending my time on social media advertising. It just felt like I could do so much more.
So some of it was about the fulfillment you were getting from the work you were doing.
Yeah, exactly. Like, Instagram was a wonderful place to work in many ways. That it was the IDEO inside of Facebook, where the team was delightful. I learned an extraordinary amount about building product quickly, about marketing, about translating advertising to different audiences. And even though we think of Instagram as a consumer app, my work has always fundamentally been B2B. Like, I was working with businesses on Instagram who wanted to advertise because we were launching an ad is a B2B product, right? So Instagram had built this incredible community with, so many people falling in love with the photo sharing aspects. But when it came to, we need to create our revenue model, which is post-acquisition, we need to figure out how to get businesses to take Instagram seriously. And I found that business challenge really fascinating. So I will never regret the time that I spent, at Instagram for that learning. But one of the most important learnings was, wow, I like the disciplines that I'm learning of building product, of solving business problems. I want to apply those disciplines in finance.
How did that interest in product management manifest itself at Varo? Because typically financial institutions are not great at product management, right? Now, it could be a de novo new institution. You probably have a little more, discipline around product management. But how did that manifest itself? Maybe not. How did that manifest itself at Varo?
It was hard. It was very hard from the beginning. A couple examples. Colin Walsh, our founder, had been in banking forever before starting this. And that is why he was able to raise funds to start a bank. He had first gone to Silicon Valley VCs, and the advice was, wait, why wouldn't you just make a better mint? Why wouldn't you just make a PFM? And no shade on PFMs. We all need tools to manage our money, but a PFM alone is not going to produce the change that you want to produce. You actually need good products behind it too. So he saw the need for new financial products to be delivered in an accessible way, which I thought was extremely farsighted. The West Coast didn't get it. The East Coast did. So the first funding round was from Warburg Pincus, because they said, oh, you're a banker, so we get it. You know how to build a bank. We're sure you'll figure out the tech part, which, coming from tech, can easily go, oh. Yeah. But then the opposite is true too. There's so many fintechs who say, oh, I know everything about tech, whatever, I'll figure out the finance part. I'll just hire a finance guy. And both of those are wrong. So what I loved so much about the early days at Varo, I was about hire number 10, and on the tech side, 3 or 4. We were truly half and half. There were the finance people who'd been in finance forever, and there were the tech people who had been in tech, some fintech, some not. And it was this running joke that, okay, we know we're going to misunderstand each other a lot, but we know we're here for a larger purpose of making something that's actually useful. And that attitude toward we're going to figure it out together and be able to be tongue in cheek about the assumptions we bring into it, I thought was very helpful.
What do you think the hardest problem you had to try to solve at Varo was?
What is the business model for profitably serving people who've been shut out from the financial system for a long time?
Yeah.
Fairly, that you do get cost advantages from not needing to have branches or big legacy infrastructure. But that doesn't mean that you immediately have everything you need to have I'm going to call it a micro bank. For like, think of the idea of a minimum viable product in technology, except you're saying minimum viable financial institution. And that is very different from a traditional fintech playbook. Of course, Varo started out with a sponsor bank like anyone else. We were on top of Bancorp. But from the beginning, it was, we know we're going to apply for our own charter. And the attitude back then was being laughed out of the room. Like, you're crazy. Why would you ever do that? But it was because of this bedrock belief that when you own your own infrastructure, but more importantly, it is possible to create a financial institution that is not just a tech layer on top of an existing infrastructure, that is built to be accessible to everyone from the get-go. And I found and still find that incredibly compelling as a vision. So even in the work that we do at Attune now, it's, how can I take some of the ethos of course you need to be sustainable, of course you need to be profitable. There are ways to do that, expanding who you serve and making the experience for the people you serve much more personalized, much more tailored, much more helpful, and frankly, better for their bottom line. We talk about the bottom line for the institution all the time, but we don't necessarily talk about the bottom line for the member, except in a large "Don't Tax My Credit Union" campaign about the economic benefits of credit unions. That's an aggregate, though, and I would love to live in a world where every financial institution, as part of their own internal checks on how they're doing, says, how is our bottom line and how did we improve the bottom lines of the customers that we serve, whether that's consumers or businesses.
Was that a philosophy something you learned at the Financial Health Network?
Yes. And I mean, I think it did definitely start in the early days of Varo, but Varo was a member of the Financial Health Network.
Right.
And then after Varo, I went to Even basically right after we got approval for the bank charter, because there was all of this run up to preparing the application. Like, I wrote the CRA section of the charter application, and then it was, okay, we're going to be all heads down opening the bank for the next couple of years. I need to push product innovation further, so I'm going to go do that in a fintech where I have more room to do that.
Right.
And that was at Even, where I ran the data science teams. But in both of those cases, at Varo and Even, they were members of the Financial Health Network, which was then called CFSI, the Center for Financial Services Innovation.
Right.
And CFSI had this ethos of, wait, all these low and moderate income households have been excluded from the banking system forever because banks think they're not profitable. That's not actually true. They just don't know how to develop products to serve them. Let's actually establish, how do you develop products to serve these markets, and how do you measure the impact that you're having? So I relied heavily on the Financial Health Network's research and leadership, even during those two roles, because among my many hats, part of my portfolio was, what is the impact we're having and how do we know?
So describe the Financial Health Network, CFSI, as it is today, for those who don't understand what it is or haven't been exposed to it.
The Financial Health Network is your one-stop shop for what does financial health mean? how do you embed this as part of your strategy? And what does it actually look like for a financial institution, a fintech, a financial services organization to make financial health the lens through which they do business? So practically speaking, it's a membership organization. You can become a member and then have early access to research, have a lot of community building around these concepts. They throw a fabulous annual conference every year called Emerge that has anyone and everyone in the financial health world. The Visionary Award last year went to Bank of America. We've had the United Nations participate. This year, the headline was Opportunity Knocks, which follows how families transform their finances through credit unions. So the conference is a fantastic place to meet other people engaged in financial health work across the financial services ecosystem. And then they produce research. So there's an annual benchmark called the Financial Health Pulse that is a report on the state of financial health in America done in partnership with the University of Southern California. So if you're wondering, whoa, we're seeing this pattern in our membership and we don't know if it's just us, then looking to the national data is extremely helpful. And then they also do consulting. So if you want a deep dive into financial health strategy, or you want to hire a behavioral economics and design team to help you figure out how to help your members save more, you can engage the Financial Health Network in that way. So it is sprawling. When people say, where do you work? What do they do? It's like, well, we have these 6 business lines. But I think the best way to think about it is if you want to do anything about financial health or well-being in your business, they are the entry point and will navigate you to either the part of the organization that can best help you or to other partners outside who will help you accomplish your goals, whether that goal is developing a new product or acquiring new members or creating better impact reporting for your board or any of the others.
How did they become the bridge to Attune?
This is an interesting one. I relied on the Financial Health Network's financial health score framework while I was at Varo and at Even to measure how are the people who use Varo and Even's products and services actually changing over time. I had a big part of grad school on how do you develop a measurement methodology. It is not academic nerdery we need to get into here, but suffice to say, it is many hundreds, if not hundreds of thousands, if not millions of dollars to create robust, valid, reliable methodology for things like this. So at early days of Varo, we're a startup. It's like, I'm not making a new measurement for us. No way. Like that's out of scope in budget, in time, in staff. They've created a good one in partnership with the University of Southern California. Let's just use that. So I was going to their conferences, and in line at breakfast, their head of research said, hey, we really like what you're doing with the financial health score and product. We are hiring a head of product. Would you consider coming and working here? And at first I thought, that's really weird. A think tank is hiring a product manager. Why would they do that? Like, I've also often described the Financial Health Network as the Brookings Institution, but for financial health. So you can think of them as a powerhouse think tank that has a membership and has consulting and has events. Their board has always been incredibly farsighted and approved $1 million investment to create a technology platform to make it easier for financial institutions to measure the financial health of their employees, customers, and communities. I thought, whoa, what nonprofit think tank does that? That's really weird and really cool. They made it because even though they had published research on their scoring methodology, and even though it looks deceptively simple from the outside, it's just 8 questions, here's how you score them. The feedback they were getting over and over from financial institutions of all sizes was, we get that the output of this is simple, but running and maintaining this internally is costing us way more staff time and budget than we can handle. And we don't have the expertise internally to know what to do with the data. You could think of it almost as maybe the early days of something like NPS, where now if you talk to somebody in member experience, they will not do their work without NPS. And we're actually on the far side of that cycle where it's been used everywhere. Then people are like, this is a BS metric. Why are we using it? It's like the life cycle of a metric of nobody's using this. Oh, we should use it. Oh, everybody uses it. Oh, no, we need it's a decade long cycle of any metric, pick your business metric. But with financial health, these financial organizations from banks to credit unions and beyond, we're saying, we cannot make the most of this based on just you giving us, here are the questions and here's how to score them. So the technology investment from the FHN board was, how do we create a technology platform that automates the measurement so that you can, instead of spending 80% of your time on collecting, analyzing, cleaning data and producing a report, and then 20% on, okay, now what do we do about it? What if you flip it? What if you say, we spend max 20% time collecting and this technology platform does most of it for us. And then we can spend 80% of the time actually looking through the results together and saying, based on this, how do we want to change the products that we offer? Based on this, how do we need to change our marketing and messaging? In the podcast interview with QCash, the opening of it was, oh, wow, this was not working because we didn't have the right messaging, because credit unions didn't want to say, oh, I'm an alternative to a payday lender. I don't even want to be anywhere. Like, I don't want to touch that with a 10-foot pole. I don't want to
say those words, right?
I don't want to say those words, right? And so often community institutions actually do have the right products and services, but their members literally don't know. Like they don't know that they exist. And so you have a marketing problem even within your existing member base. And one of the things financial health assessment does is tells you, hey, here's a segmentation you can use, whether alone or in combination with personas or other segmentations you have internally, to reach the right member with the right message at the right time, so that they are actually utilizing the products and services that you have that are exactly right for them. But you didn't know they needed it. They didn't know you had it. And it was a sort of tragedy of, you two could be doing really cool things together if only you talk to each other. So this is a mechanism for building that bridge to understand, where is the member right now? What do they need most? And do we already have it? Great. Then let's show them that. If we don't have it, well, then shoot. How many members are actually experiencing the same challenge? And does that mean that we need to develop a new solution for this, whether that's building or buying?
Yeah, I love what you said about flipping the data collection and the analysis components of gathering and analyzing that data, right? Because there's probably, you spend so much time, maybe it's just because we're on the technology side, right? We see situations where we are spending all that time doing the gathering, the cleaning, the prepping, the delivery, and then the customer, the user of it, spends so little time actually doing it, using it, which by the way, probably means they're going to move on to something else in the next turn of fashion, right? As it relates to data versus seeing the insight, because I can imagine spending more time looking at the data, that gives you 100 new ideas about what you can do to serve that member.
Exactly.
Yeah.
There's this talk I love from 2012. Not sure if it's online, but it was from an engineer at Google. And there was a picture of a bunch of steel I-beams on a loading dock. No text, just the picture. And he says to the audience, hey, I work for you, and I'm telling you, hey, I'm going to buy all these I-beams for us because we might need them one day. Raise your hand if you think this is a good business decision. And then, of course, it's absurd on the face of it. And we're like, who would do that? That's nuts. But that's literally what people do with data. Wow. They say, oh, we're going to collect all this data, and I'm sure we'll use it some way. But data is expensive to collect. It's expensive to maintain. I am working with one of our clients on properly integrating into their core and understanding the financial health of their entire member base from core data. And I asked, do you have a data dictionary? And they laughed at me. They were like, data dictionary? We don't know what's in there. We have no clue what's in there. And we have to have a council of people from across departments just to help each other. But even then, of course, we've had a dream of having a data dictionary for years, but we just don't. And that's an example of the cost, right? Collecting it is a cost, but even after it's collected, there's a cost in maintaining. Just like you have tech debt in engineering, you have data debt internally when you don't know what you have or where it is or how it's labeled or how to use it, or you can't get it out, then it's like you're wasting on top of that all of this staff time to say, well, I know that we could analyze this. I know, like, shouldn't it be easy just to see how many products we have per member, or how many members responded to this campaign, or connect those two things? And it's like, nope, those are different teams. Those are different sources. We don't know how to do that. And I think it's really I think it's short-sighted. I think it would be a much more effective use of resources to say, let's actually collect less, but use more. Have a rule that if you're going to collect it, you have to know what decision you're going to make with it and how that decision is going to improve your business. When we're doing research training in graduate school, it is a very common error for first-year PhD students learning about research methods to design a survey that has 120 questions, or to design a transaction analysis project that has requests out to here. And the professor will inevitably gently say, hey, how are you going to use all of that? Show me why every single question and every single piece of data you want is strictly required to serve the client. The unique thing about my grad program at Georgia Tech, it was the science and technology policy. And it revolved around serving clients. So unlike many academic programs, we had clients and research projects to deliver all along the way. And no matter how fancy or appealing the data sources or the methodology is, the question is always, will collecting that piece of information help your client make a better decision? And if we can't answer that, we shouldn't collect it. So when it comes to financial health, we're either collecting too much stuff and not using it, or we're collecting the wrong things because it's easier to collect them. So as one example, we say, in credit unions, we're people helping people. And we want to know, are we improving our members' bottom lines? Because the ideal is we improve the financial lives of our employees, who then are able to improve the financial lives of our members, who then are able to improve the finances of the credit union in this sustainable circle.
That's right.
How do you know if you're improving the financial lives of your employees? Oh, we pay them wages. We have these great benefits. Cool. Are they better off after 5 years with you than before?
Right.
How do you know?
Right.
Or your members, oh, but we have better rates on savings, and we have more affordable rates on loans, and we don't charge as many fees. And so on average, they save X in fees per year. Okay. And what? Like, is your member actually truly financially better off after 5 years with you? How do you know? We're not checking.
Does the segmentation of the financial relationships of individuals negatively impact the ability to fully understand, are you making an impact, right? Because the reality is very, very few of us will have all of our accounts at one institution, right? We'll have very segmented lives. Ron Shevlin famously says, there's 20 apps on your phone, financial services apps on your phone, right? How do you think that impacts the institution's ability to really understand if they're making an impact or not?
I have a client who goes around internally saying, PFI is dead, PFI is dead, PFI is dead, for exactly this reason. That, of course, every financial institution's dream is to be the long-term trusted financial partner where your member, your customer has all of their accounts with you. But you're right, it is really fragmented. And this is where surveys are essential. I'm a data nerd. I love actually working with underlying transaction data and understanding where someone is. But the reality is you're not going to get that for everyone. Right. One, they may not have all of their accounts with you. Two, even if you have the ability to aggregate other accounts through a PFM tool you have, maybe inside of online banking, the opt-in rates for aggregating other accounts are quite low. Three, you don't know if they've aggregated all of their relevant accounts. So even in the best case, the ability to understand where someone is and what they need based on their transactions, you're looking at what fraction actually have all of their accounts with you, or aggregated all of them. It's a fraction of a fraction of a fraction.
Mm-hmm.
And it is going to be much better, faster, cheaper to ask them a few simple questions about their financial life
Mm-hmm.
to get the equivalent good enough read that you could get by sitting down with someone for a couple hours and having them link all of their accounts.
Right.
I'll give you one example of there's a short-term savings metric. Ask anybody in personal finance, what should somebody have in an emergency fund? 3 to 6 months is a rule of thumb. You can ask if you can see if a member has all of their savings with you. If they don't have a savings account with you, you could say, oh, they don't have an emergency fund. Or you could say, oh, maybe they have it somewhere else. Let me try to get them to aggregate. Do they aggregate? Yes, no. Do they aggregate all of the accounts to give you visibility into savings?
Right.
And how much effort is it actually for that member to go through the flow of saying, this is what I have. This is the account. This is the credential. Let me log in. Oh, it's broken. Oh, it's sending me a 2-factor. Oh, I need to add the other one. Oh, I forgot. I actually did put my savings somewhere else far away, so I would forget about it and not touch it. So do I even want to link it here? Like, walk yourself through what has to happen for them to do that work, for you to get the output of, do they have an emergency savings or not? And if not, how can I help them?
Right.
The alternatives is for you to send them a single question that says, if you stopped earning money today, how long would the cash you have last you? 1 to 2 weeks, up to 6 months. How long does it take them to do that? What is the effort that it takes them to do that? It's like that. So there's a kind of misconception that transaction data is always better. And it's not. It is sometimes better, and I love it and I use it, but it is not universally better. So the best thing that you can do to understand where your member is and what they need is to triangulate between different data sources.
Do you think generational changes between, say, those who grew up with the internet, old guys like me, right, versus and the things we're willing to put up with, micro deposits, copy your rate, all the things to make these things work, right? I look at my sons; they have no interest in that crap. Like, if it doesn't work out of the box, they're not going to do it. They get so frustrated trying to link an account with micro deposits. Like, you would think somebody's not trying to help them, right? So is there a generational difference into how to approach gathering data? Or maybe that's your point, right? If you ask the right question, you'll get it from both of them. You don't have to make generational differences in that approach.
Yeah. Well, and I think it's not so much a generational difference as a technology adoption and tolerance for pain difference. And one of the cool things that people who are very technology forward can teach us, whether they are 22 or 65, is, hey, the rest of us shouldn't have to put up with this shit.
Yes.
They're helping raise the bar, right?
That's a great point.
We are now accustomed to delivery next day from Amazon Prime, no matter how old we are. Yep. And that's because it's an innovation that is incredibly useful and that is widespread enough. Like, I forget the stat, what % of Americans are members of Prime, but it's extraordinary. Right. So I think that it's actually really nice when people say, hey, this doesn't have to be this hard. I mean, that's what I've always loved about user experience and product. When I was first working at Salesforce, my grad student classmates were very confused. One, like, you have a PhD from Georgia Tech. Why are you not in academia? Well, I don't want to write a journal article that's going to be read by 10 people.
Right.
But also at Salesforce, I was working on usability and UX improvements for analytics dashboards for salespeople, and then their regional managers, their AVPs, their EVPs. So there's this really complex chain of what does the salesperson need when they're out in the field logging a call, to what does their manager need for reporting, to how do you aggregate those reports. And each of them have different needs for what information do they need to see, how quickly in order to make what decision. And when I was making improvements there, I thought, wow, how many people are just so annoyed and frustrated by having to fill out a stupid form that doesn't work. And if we can reduce that frustration, I think that's great. I think that's what I've always liked about B2B. It may not be the most, shiny object, but you're solving frustrations that are very widespread.
Is that part of the intent with Attune, is to help bring some of those insights to the institutions?
It is primarily the insights for the institution. So this is a misconception that, we are not primarily a tool that is anything and everything for the member. Sometimes people will say, well, oh, do you provide financial education, or do you actually provide savings products? Like, no, because you already have that. I don't want to duplicate what you already have. If it ain't broke, don't fix it. Like, if what you have is working, that's great. The problem is that you don't know how to connect the member with the stuff you already have in a way that's immediately relevant, timely, and useful. That's an internal business problem that I can help you solve. I have to work with the member in some way to make that connection, but Attune is not going to be the, portal that the end user, the member, is going to stay with and do gamified financial education or set up savings plans. We are the diagnostic that will then help connect them to the right part of your ecosystem, whether it's something you built in-house, whether it's a content series, whether it's an event, whether it is making an appointment with a financial coach, whether it's another vendor that you work with. We will route them to the best and most appropriate thing for them. That's the member experience side. But the biggest value is internally for the financial institution to make better decisions. So in product, it's, okay, oh my gosh, we want to improve cross-sell and lifetime value. How do we do that? How do we make sure that we're sending people the right information? Well, how are you sending that out today? Are you using email campaigns? Are you using in-app banners? How are you even doing the segmentation to figure out what people need? Or are you just saying, I don't know, if they don't have a loan, they probably need a loan. Like, I mean, maybe they do, but maybe they don't. And then the flip side, like, maybe you do have a fantastic savings program, but if you know that somebody is drowning in debt, then the most important thing is getting rid of that as fast as possible. Don't show them irrelevant stuff. So having segmentation frameworks where you can say, here is the subset of the people you serve who actually right now need exactly this in lending. That is how you should structure your campaigns. That's how you should measure lift. That is extremely important and useful. And then there's the efficiency piece too, that, we're improving. You're not having to spend 80% of your time on data collection, cleaning, analysis, because we're just giving you, hey, here is our analysis of what your members need and why they need it and when they need it. Here is our recommendation. You are on the inside. What else are you seeing? What are we missing? Let's build this together so that we can make sure, first and foremost, that you're marketing the right things to the right people at the right time. But then second, if there are actually gaps in your offerings, that we can help you think through, what would a successful offering to address that gap be? Whether it's, building a solution, buying a solution, and all of this work that I just described, and, getting the right product to the right member at the right time, both from a marketing standpoint and from a build standpoint, it applies to your employees too. So this was surprising to me in building Attune. We didn't set out to primarily do this, but 100% of our clients are also using Attune for their own internal employee financial health, because we don't think of HR as product managers, but they actually are. When you take a step back for a second, what does HR have to do at least once a year? Understand the benefits package. What are we offering? How are we offering it? How much does it cost? What is our campaign for rolling it out? What are our utilization rates? What is the bang for the buck among all of the different benefits that we offer? And how can we make sure that we're optimizing our employee experience, but at a cost rate that's sustainable for us? They're also product managers. They're just not recognized as such. So that same thought process can go into, what are the financial health needs of your employees? What is the benefits package you offer? Where is there a gap? We worked with one really large credit union that all of their offerings were in saving and planning, but they had pretty much nothing for helping with borrowing, with debt pay down, or with day-to-day spending. And, a classic example is if your workforce is drowning in student debt and other forms of debt, and you say, but we have this great 401k program, we have this match, you're literally leaving free money on the table. What kind of idiot would leave free money on the table and forgo 30 years of compounding? Well, the kind of idiot whose loan payments far exceed any possible margin for savings, and they know that the return that they're getting by making that loan payment is higher than the return that they would get even in this long-term investment.
Right.
So you have the ability as the product leader for your employee benefits to say, oh, what if we reallocated some of our 401k funds to helping repay student loans instead? Secure 2.0 allows you to do that. And it's no cost difference to you, but it's an enormous difference to your staff. And then your utilization rates go up, and then your employee stress goes down, and then your productivity goes up, and then your retention goes up. And then when your employees are less stressed about their own finances, they are much better able to do that personalized guiding and selling to members to help them find the right thing. Because if I'm a member, whether it's digitally or in a branch, and I'm trying to figure out what the next right product is for me, and I'm talking to somebody who is stressed out of their mind because their finances aren't in good shape, that is not going to go well. So that's the kind of hidden use case, that HR is never our primary buyer, but in literally 100% of cases, they are a secondary user, because the product work that they have to do is completely analogous to the product work that the deposit and lending teams have to do.
Who is the typical buyer that comes to you? That's actually going to be my question, because with such a broad set of impacts, right? I know when you have a company, you're trying to target particular people when you're trying to sell. Like, who is your typical buyer? That who makes the first contact with you and says, "Hey, I'm interested in your services"?
It's often the CEO. I was having a conversation with the CEO recently who said, listen, I see everybody talking about financial health and financial wellness, but frankly, I think most of it is not real. Most of it is we're slapping a mission statement on a website and we don't have any data to back it up. And he said, I've heard that people are using financial health as a differentiator to grow, but I need to see the data. My board is asking me to look into this. My board thinks that look at BECU, which is a client of ours. Look at Redwood, which is a client of ours. They're both growing extremely well. They're incredibly respected in the credit union industry. They're both large, and they have made strategic investments in financial health and well-being for more than a decade now, from the CEO on down, actually from the board on down.
Right.
So it's not that they do one thing. It's that they say, we are going to operate our institution in such a way that we measure how we're impacting the bottom line of our employees and members with as much rigor as we measure our own financial performance. So to date, most of our clients have been credit unions like that, where there is a board mandate and the CEO has this as a vision and personal priority to move forward. So then the broad reach makes a lot of sense. After that, another thing that we hear a lot is from credit unions who see this and are like, of course, I would love to be BECU. If I could just be BECU, I'd be done.
Sure.
This would be over. But, I am a small person and I cannot change my entire institution, and I cannot get my entire institution to buy into that. What should I do? And in that case, we're often engaging with a VP of marketing or member experience, or a director of financial well-being. And what they can do within their domain is make the ongoing, what do our members need and why do they need it, analysis process that they already have much more efficient in terms of staff time and budget, and then also much more profitable in terms of the cross-sell revenue and lifetime value that you get on the other side of using that data rather than just sitting on it. So first and best buyer is CEO with the backing of a board that has this differentiated vision. But just as often we have VPs of marketing or member experience or directors of financial health or well-being who say, part of my responsibility is, voice of member, voice of customer. What do our members need? Why do they need it? We do that well already, but we realize that traditional segmentations are missing a critical element, which is financial health. We know that we need to do that to make sure that our products are relevant, because it's all about relevance, right? I mean, we have so many conversations about how do we attract Gen Z, and is it about technology? Is it that, they won't deal with this, micro deposits to verify an account?
Right.
Maybe, but then I've also seen some studies that Gen Z is actually sometimes more likely to go into a branch or pick up the phone because they're impatient with tech that doesn't work. They just want you to solve their problem. And then framed like that, that's not unique to Gen Z. We all just want the FI to solve our problem. So you're using these outdated segmentations that will tell you somebody's age or somebody's income, but it doesn't tell you, like, you could be a 22-year-old making $30,000 a year and the financially healthiest person on the planet, which is maybe a little counterintuitive, but if you're able to live rent-free with family and you were able to go to a community college and then go to a public institution and you got a scholarship and your ongoing bills are very, very low, then, maybe your monthly expenses for food are like $500. And at $500, a 12-month emergency fund is $6,000. And $6,000 is, only 20% of your annual income.
Right.
So presumably you could save a 12-month emergency fund over a year or two.
Right.
Which is not possible when your expenses are higher. So when you're relying on things like income alone, or even, credit reports are really rich, but you're going to miss what does the member actually need. And in order to market to them, to get them to adopt the most relevant product or service for them, you have to know what they actually need. And your existing metrics just aren't capturing it.
Is there so when a CEO reaches out to you and says, Andy, I want to focus on how, we can better support or create, financial wellness programs, or consider financial wellness as a part of our business plan for the institution.
Yep.
How long until you can start seeing an impact of that work? Right. Because, you talked about BECU doing it for 10 years. Is this something that they can, will they start to see the results in 6 months, 12 months, and be able to start, because you're putting in the mechanisms to measure this, right? That is the key. That's the key element here, right?
Exactly.
When do the measurements start moving?
There are short-term, medium-term, and long-term measurements. I think that's an important component to this. In any change journey, like in your personal life, let's say you want to develop a fitness habit and you're like, okay, like I'm a power lifter as an example. That's my sport. It's always been my sport.
That's impressive. That is an impressive sport.
Yeah. So I have a 315-pound deadlift, and I did not start with a 315-pound deadlift. I'm 5'1", I weigh 150. So like I'm little, right? I'm a very small person and I lift very heavy weights. I did not start with that. I started with, can I actually go to the gym 3 times a week? Can I actually do this with good form? And if I had been motivated only by, I want to lift 3 plates more than twice my weight, then I would not have stuck with it for the amount of time that was required to make that lift, right? But it's not to say that I didn't see benefits or I didn't see impact even earlier on. Every time I go to the gym, I feel better. I do it because I feel better in the moment, and because I sleep better, and because food tastes better, and because I am actually, building a community with the people around me in the gym. There are all of these impacts that are immediate and important. It's not to say that we ignore the long-term impact, but to motivate us as individuals and as institutions to stick with anything hard, We
Yeah.
have to say, here's what you're going to see immediately. Here's
Right.
what you're going to see partway down the line. Here's what you're going
Right.
to see later. So what you're going to see immediately when you do this work is you align your entire staff around your purpose, and they get actually more excited about coming to work, and they get more engaged, and then your productivity goes up and your costs go down, your turnover costs go down, but then also your cost to just get something done. Like if you're not motivated and you're like, oh, do I really have to? It's going to be sluggish and it's going to take longer, and the quality is not going to be as good in whatever you're doing. So the first thing that you see doing this work is, whoa, hang on, our CEO is saying that our mission actually means something. It's not just words on a page. It's we're measuring whether we're actually doing it. That's insane. I've never seen a company do that. Like, I didn't think it was real. We have a client, Credit Human in San Antonio, where they have
great credit union.
They're great. They actually have a goal to have their employees be more financially healthy than their members, and their members be more financially healthy than the nation. And their board is pushing them. What do you need to do to make that true? How cool is that?
Yeah.
You can do that while being profitable. In fact, you cannot do this if you're not profitable. But that the first impact that you see is people are energized when you walk the walk.
Right.
That creates this intangible sense of, oh my gosh, we're doing something cool, we're doing something big, we're doing something motivating. But then it also creates the very tangible benefits of internal alignment, efficiency, a way better, faster prioritization lens when you're evaluating. There are a million initiatives we want to do. We're all resource constrained, whether that's time, whether that's budget, whether that's technology infrastructure. When you're looking at, of all the things we could do this year, what should we prioritize? One of the filters is, does this help make our employees better off, our members better off, and our own bottom line better off? And then it's a very quick, like, oh, not that, not that, not that. So you have these efficiency gains from day one. And then what you start to see with your employees is it'll move when what you do with your employees moves. So you can't say, I'm going to see how my team members are doing, but I'm going to change literally nothing about what benefits we offer or how we market them or how we support them and expect to see things improve. You have to actually say, here's the confidential financial coaching that's available to you. Or one example, we started this work much more recently with a large credit union. And the first thing that they saw was, oh, wow, we realized that our employees needed help with tax planning. And our benefits provider actually already offers that as a free service. It's literally no cost to us, but employees don't know about it. So let's send out a quick campaign to advertise that you actually can make an appointment for tax planning. Those appointment slots sold out within a day or two. And I mean, sold out as in they were all booked, but it was no cost to the employee and no cost to the employer. So that's an obvious win where you wouldn't have seen it if you hadn't done the assessment. And then that, especially for tax planning, that literally is money in your pocket right away. Yeah. So you're able to see things like that, or you're able to, on the member side, see, oh, wow, either, we have this thing that's underutilized and we can get more people to use it, which is more incremental revenue from, product cross-sell, or you realize, oh, there's a need here that we didn't know about. Let's go get that. So this kind of assessment, if somebody doesn't have, QCash or some small dollar loan product that's really good, would reveal the need for that. And then you can make an informed decision to go out and find the appropriate vendors and then track the impact. But, the impact in terms of improving somebody's financial well-being comes from a combination of what do you as the financial institution offer? How do you market it so that people know about it? And then on the individual side, do I take advantage of it, and do I do the right thing? And of course that matters, but no amount of knowing the right thing and being incredibly financially literate and educated helps if you don't have the right tools in front of you.
Right. Andy, for a CEO who is finally ready to start pushing on that financial wellness flywheel, how do they get a hold of you to start the process? What's the website? How do they get a hold of you where they can make an inquiry and you can start working with you?
Yep. You can email me at andy@attune.co. You can connect with me on LinkedIn. And then our website is attune, attune.co. If that is hard to remember, we also used to be called FinHealthCheck. So if you go to finhealthcheck.com, it will redirect to us. It's a little easier to remember, but also much, it's a small part of what we do. The shift from FinHealthCheck to Attune was, yes, we do the financial health checkup, but in service of attuning what you do to what your employees, members, communities actually need, because that's how everybody makes more. That's how everybody grows. That's how everybody becomes more financially healthy, more financially sustainable, including employees and members and the FI themselves.
That's awesome. That's awesome. What a fascinating discussion. Andy, I appreciate you so much for coming online and sharing that with us today. I think you're going to have a lot of credit unions reaching out to you to know how to finally move the needle on financial wellness. So congratulations.
Thank you. This is really fun.
I have to share with you, that was absolutely one of my favorite conversations ever on the podcast. Please check out what Andy's doing at Attune. If you enjoyed this, please like and subscribe on your platform of choice. And don't forget to check out our LinkedIn group for additional content. We will see you next time.